Hello guys, good day and welcome to my YouTube channel. My name is Posa, and if today is your first time of watching my video, I would like you to make use of the subscribe button and don't also forget to push on your notification in order to be notified when my next video drops. Alright, today without wasting much of your time, I'll be giving you a strategy, another different strategy that has been tested and is working effectively. Like I said in my last video, for those that have been following my videos, I know you can testify that the strategy has been working effectively for you, because I've been using the strategy. I've been getting comments and accolades for some of my strategies that I've been posting here on YouTube. One thing you should know about strategy is this: strategy are not 100%. There is one thing you should know: they are not 100% accurate, but with the technicality attached to it, you are sure of getting 80% win slash 20% lost. That is how it goes. No strategy is 100%. Don't allow anyone deceive you about that. You don't get strategy for 100%. All right, today I'll be sharing a very easy and sweet strategy that has been tested. One thing you should know about strategy is this: you don't need too much indicators. Like I do say on my videos, you don't need too much indicators to bombard your brain. Once you have the right indicators, you are good to go. You are good to go. Alright, this strategy works for only boom and crash. It works for boom 500, boom 1000, crash 500, crash 1000. With this strategy, you are sure of catching spikes. You are sure of catching spikes on both boom and crash. Boom and crash. Now, one thing you should know is this: there are conditions that needs to be met before you start trading. Like I do say on my videos, you should be able to dictate the trend on the market, and also don't forget your support line and your resistance line. Now, when it's on your support line, you buy. That is on that should be on boom. Then when it's on your resistance line, you sell. That should be on your crash. Now when it's on your when you are let me use crash 500 as a case study. Now for you to check the trend, you always use your average 48 line to check the trend of the market. Use your average 48 line. Now once this let me pop up this for easy. Okay, once this average 48 line, the candles are forming, the bearish candle are forming below the average 48 line, it's a sure signal for you to start aiming for the spikes. You get, once it's below, this is how you check for the trend of the market to know if the market is on uptrend or on downtrend. Once the candles are forming below, it's a short signal for you to start aiming for the spikes. Now once it gets to don't forget to always know your support line. Once it gets to the support line, there is always a reversal. It will start buying. So at this point, what I'm trying to say is this: once you get to a particular target, it's always advisable you close for the day. You don't expect it to spike for the whole day. You understand? You don't expect it to spike for the whole day. As a trader, even if you're a professional trader or a beginner, you just have to set a target for each of your trades, or a particular day rather. That will really help you to master your trade and have confidence of the markets. Not being greedy. That's one thing. All right, once you check this trend line from your H1, that is your 1 hour time frame, and you can see here it's forming below the average 48 line. This is a short signal for you, but this is a previous market I'm showing you here. But as you can see here, you can see it's now going above. It's now going above the average 48 line here. You can see a bullish candles are forming above the average 48 line. Now this a confirmation for you not to aim for spikes, because you can see there's retracement, little retracement. There are little retracement in this trade, but the trend here is actually an uptrend, which is not advisable for you to trade. It's actually forming what I call higher low, higher high, in a sense that the trend is going up, is going upward, and it's not advisable for you to trade. Now if you check a lower time frame, you'll see it just spike a little. These are retracements. It's still the trend of the market has been confirmed on H1 that is still be going up. All right, without wasting much of your time, I'll be showing you the settings for this strategy. Now the first thing you should add is this. Boom, you go to your Bollinger Band. This is the settings. The first thing you add is Bollinger Band, and this is the settings for your Bollinger Band. Now once you are done with these settings, your period 35, deviation 1.5, shift 0, apply close, style 2 pixel. Now once you are done with these settings, you click on done. Now this let me take this out for proper illustration. Okay, this line comes out. This is the upper Bollinger Band, this is the middle, and this is the lower Bollinger Band. Now this comes out for you. Now this shows you the extent to which market have gone. Now the next on our list to add will be our moving average 48 line. I've explained this moving average 48 line for you already, so you know what it really stands for. It can also be used to detect spike, which I will still show you. Now this, once you are done with that settings, this line comes out here. This is the average 48 line. Now the next to add here is our Williams percentage. This is the settings, period 25, pixel 2, then the level minus 80 by minus 20. So once you are done, you go back and click on done. Now this comes out for you. Let me take another one to illustrate well for you. All right, this line comes out for you here. This comes out for you. Now once you are done with this, the next to add is our Bollinger Band again. Now when you're adding this Bollinger Band, this is where you click on to add it. All right, now this is the Bollinger Band. This is the settings for the Bollinger Band. The period is 28. Take note of this. Deviation 1.7, shift 0, apply close, pixel two picks here, then you choose black. Once you are done, you click on done. Now this other one pops out for you. These are the Bollinger Bands here: upper, middle, lower Bollinger Band. Now, how do you catch spikes? I will show you how to catch spike on crash market, and I'll still show you how to catch on boom market. Whichever thing I'm teaching you on crash is the opposite on boom. All right. Now, how do you catch spikes? You need these confirmations for you to catch spike. The first confirmation will be the line here, that is the upper Bollinger Band here, crossing the support line of the first crash. You get me? Or rather, it crosses the buy candle up here. This one confirmation. The next confirmation here will be the red line here crossing this upper Bollinger Band here. Now, once you see something like this, it's a signal for you to place a trade. It will come instantly. You will see this crash coming down once it crosses the upper Bollinger Band here. Now, don't forget, it will start crashing, but don't forget to know your support line. You understand? You have to draw your support line to know when it will stop and it start retracing back. Now, as a trader, being not to be greedy, you just have to have a target. Now, once it crashes and gets to even this point, you can even close your trade and wait for the next opportunity to come. In trading boom and crash, patience is the key to trading boom and crash. Once you are patient enough, you'll be able to get hold of the market easily. Now, these are the confirmation you use. Once you see this, you are good to go. And don't forget the trend line before you start selling on crash. Don't forget that this the candles should form below the average 48 line. As you can see here, once it's forming on H1, as you can see here, you see more spikes. Now, how do you use it for boom? Boom, like I said, is the opposite of crash. Now, let me give you how you trade on this market. Now, let me bring out a line for you so you can understand. All right. Once it gets to its support level, you'll see a massive spike coming up. So once it crosses this line here and you see a first spike here, now it's a signal for you to place your trade. Now the next one, like I said, is confirming from this other point here. Once it crosses the lower Bollinger Band here, it's a sure signal for you to aim for the spikes on boom. Now, this strategy has been tested and it works effectively. It's working effectively, and like I said earlier, you don't need too much indicators to catch spike, and you don't expect every strategy to work 100%. So it's always advisable for you to test the strategy on your demo account. That is what demo is meant for, to test your strategy and to master your trade. That is what it's actually used for. So you test your strategy and confirm these things I've showed you. Once you have been able to confirm this strategy, you are good to go to use it on your real account. All right, guys, thank you. That will be all for now. Hope to see you guys on my next video. Do have a good day. Thank you.